I assume that Amazon will have a few other tricks up their sleeve, but just putting the Amazon advertising apparatus around what they're doing. I think advertising, not a surprise. We've seen this for a while. That's one big takeaway, but we're only getting started still. So there's a lot more in front of Amazon.
Hey gang, it's Thursday, February 17th. Andrew and listeners, welcome to the Behind the Numbers Daily, an e-marketer podcast made possible by Mountain. I'm Marcus, and today I'm joined by one of our principal analysts covering retail and e-commerce. It's Andrew Lipsman.
Hey, Marcus.
Hey fella, thanks for hanging out. Today's fact: where did the necktie come from? The origin of the necktie can be traced back to the 17th century. During the 30 Years' War, which was from 1618 to 1648, and the French hired Croatian mercenaries. Not expecting that, were you? Croatian mercenaries who wore traditional knotted neckerchiefs around their necks as part of their uniform. This held the top of their jackets together and was more practical than stiff collars. In the late 18th century, individual styles of tying them became popular and people started calling them ties. They're definitely gone now, right?
I'm so glad we don't have to wear them every day to work.
They're the worst.
I was just making fun of my dad, who's a big listener of this podcast, by the way.
Oh, shout out Mr. Lipsman. What's going on?
Yeah, exactly. He had to starch his collar and wear a tie to work every day.
Yeah, it's horrendous.
I'm very glad I don't have to do that.
Yeah, most people tie it the same way. Probably like 1, 2, 3, 4 variations of how people tie the tie. But in the late 1990s, two researchers at Cambridge University used mathematical modeling to discover that it is topologically possible to tie 85 different knots with a conventional tie. That's time well spent, isn't it? I feel like they've got too much time on their hands at Cambridge. Do some proper research, Cambridge, okay? What about the tie? Anyway, today's real topic is Amazon slowing down as they break out advertising. Andrew, we're talking all about Amazon today and trying to figure out what's going on with the company, because what they've reported, their earnings and how the world reacted seemed to be quite different. So we're going to go through a lot of their numbers from their Q4 earnings, get your reaction to those. We'll talk a bit about some of the Super Bowl ads that Amazon had as well. And then we've got in other news as per usual. But let's start, Andrew, just with your initial reaction to Amazon's Q4 numbers.
My reaction was a little bit different than Wall Street's. Wall Street loved Amazon's earnings, and it traded over 10% in after hours. I think it ultimately added close to $200 billion in market cap coming out of earnings. My initial reaction was that I was really underwhelmed. I thought the core numbers were not particularly strong. Yes,
they did look normal, right? They looked like normal numbers. Let's go through a couple here. Total net sales hit $137 billion.
Yeah, totally normal,
Okay,
Marcus.
That's not normal. But okay, I have not set that up well. Up 10%, up nearly 10%. That's the normal part, I swear. $137 billion is $12 billion more than they made their previous quarterly record of 125 of last Q4. So that's high, but the 10% is pretty normal. Last Q4, they're up 44%. So the 10% seems pretty normal, all things considered. And then you look at a couple of other line items here. Half of that $137 billion that Amazon made comes from selling things on Amazon. And that $66 billion they made was slightly down. That's right, down 0.6% from the $66.5 billion from last Q4. So that number's slightly down. Again, last Q4 it was up 46%, and this Q4 it was slightly down. And then another line item for you, another chunk of the money Amazon made, 22% of the pie comes from third-party seller services. That was up 11%. Again, 5 times slower than last Q4. What's going on, Andrew?
Yeah, well, I think you're right to start off by mentioning that last Q4, the comps were really, really difficult for Amazon. So I went into this with a mindset that it was going to be hard to demonstrate, really aggressive growth on top of last year. I'll tell you what I do when I look at Amazon's momentum. There are 3 line items that I focus on first. The first one is online stores. That's kind of the quickest look at the momentum in the core e-commerce business. Mm-hmm. And I'm going to mention some numbers, but this is the line that actually excludes foreign currency impact. So
Okay.
it might slightly diverge from other numbers that you see. But in the last 3 quarters, going back to Q2, it was 13%. Then it went down to 3% growth in Q3, and then it was just 1%. So that showed sort of a decrease in momentum in some of that core online business. Then the next two I look at are AWS, and that part of the business, we know that that's a fairly decent sized and very, very profitable line of business. That has been trending in a more positive direction. So actually, we've seen some acceleration in growth. And we did see that happen once again this quarter. It added, I think, another percentage point of growth over the prior quarter. And then the last one is what had previously been other and is now breakout for advertising. But other was previously primarily advertising. And that's also a big profit generator. So I always look at them kind of in the context of what that growth rate had been the last couple of quarters. And what I was looking for Amazon, frankly, after a soft Q3 and Amazon's history of kind of being conservative on their Q4 guidance and then really overperforming, I had thought that e-commerce business was going to reaccelerate off of that 3% number. So that was my expectation. Part of my thinking there was also that Google had just reported their earnings a few days prior. And in their earnings, they noted strength in ads coming from retailers. So I thought the kind of e-commerce momentum was going to be in Amazon's favor. We'd see a reacceleration there. As that reaccelerates, their ad business tends to reaccelerate along with it. So I thought those indicators, if we saw that number move towards high single digits or something of that sort, that Amazon would end up having a great quarter. Well, it didn't. It went down. It ticked down a couple more percentage points. So broadly speaking, that was the first thing I looked at. So that, the implications on advertising, which also saw a big deceleration. And then the one real bright spot in those core business numbers ultimately was AWS.
Yeah.
So that was my initial read. It was like, okay, there's a bright spot here, but overall, it's not looking great.
Yeah. Nearly 13% of the money Amazon makes comes from AWS. It was up 40% pretty much in Q4, and it was the highest line item growth by a long shot. In terms of their subscription services, 6% of the money they make comes from those. That was up 15%. And then, on the subscription services, Andrew, what do you make of where that was, given that Prime just upped its price?
Yeah, well, I think the Prime price increase, which they also announced alongside earnings, that's a really important data point here. So if we want to get to the question of why did Wall Street have a positive reaction, I think we need to start by looking there. So the price increase, which many had expected, Amazon has been on a 4-year cycle in terms of doing a $20 a year price increase.
Yep.
The timing made a ton of sense if you think about it, given inflation. There have been lots of other companies raising their prices at the same time, so there's strength in numbers. So even though there was maybe some expectation, when you have that certainty, that extra $20 across tens of millions or hundreds of millions of consumers, from this point in time, it's kind of like pure profit dropping to the bottom line. Yes, they've been investing ahead of that for a while, so it's not like it comes with no costs. But if you just think about like the marginal benefit that they're getting, it's kind of like pure profit. So that's the first thing I think Wall Street really liked. I probably underappreciated AWS, which has gotten pretty big now, and the fact that it's accelerating, that's also dropping a lot more margin. So those fundamentals are both really good for future earnings potential for Amazon. But you just have to weigh that against the fact that the core commerce business really kind of struggled to tread water this quarter. Yeah.
An increase, just for back of the napkin math, an increase of $20 over 100 million people would be just a cheeky little $2 billion. No big deal. Really quickly, Andrew, before we move on to the advertising part, because that made headlines because Amazon broke out advertising for the first time ever. Sticking with one other line item related to selling things, about 3.4% comes from physical stores and the money Amazon makes, up 16%, which was kind of interesting because last Q4 they fell 8%. What do you make of that? And should we really be paying any attention to the physical store line item at this point because it is so small?
Not yet. It doesn't move the needle on their earnings. I think it's 4% of revenue. I mean, the key thing, that the growth number, it was a relative bright spot, but it was also bouncing back from a depressed brick and mortar number in Q4 last year. So a lot of it was just reflecting that. Yeah, this is going to become more important to their business over the next couple of years, but right now, I don't think it's much of a needle mover when it comes to earnings.
Okay. So Amazon broke out Amazon advertising for the first time, calling it Advertising services, that line item made $9.7 billion in the quarter, roughly 10, up 32%. And that's good enough for 7% of all the money Amazon made in Q4 coming from advertising services, which would have been $31 billion for the year, was roughly $10 billion for Q4. Other, which Andrew mentioned, used to include Amazon advertising, but doesn't now. Now it only accounts for 0.5% of the total money that Amazon makes. Andrew, what did you make of Amazon breaking out its ad business into its own line item for the first time?
It's probably inevitable. It's getting to be pretty big. And I'm sure at some level there either is at a level of materiality or is about to reach a level of materiality where they probably have to report it. Several folks have been predicting this for a while now, so I'm not surprised that they did it. It's obviously a surprise when it happened. Now, what's interesting is a lot of the headlines coming after were very shocked and surprised at the size of Amazon's ad business. It wasn't shocking at all. Our own forecasts, which looked very closely or had historically looked very closely at that other line item, knew that advertising was the majority of it, right? I mean, we were already factoring it that well north of 90% of that other line item was advertising. So Amazon's actual reported numbers were very much in line with our forecast. I think we had previously forecast 31.5 billion and it ended up coming in at 31.2 billion for the year. Yeah. So very, very close. But again, it was just factoring in the right factor of knowing that the vast majority of that other line item was advertising. So I don't think it was really much of a mystery.
Mm-hmm. Yeah, shout out to our forecasting team. They absolutely nailed that. 31.2 versus 31.5 in terms of what we expected and actual. A few things, Andrew, that really put this in context for me were just the comparisons to Amazon's advertising business and other advertising businesses. They were saying that Amazon's ad business is larger than YouTube's ad business, which grew nearly 50% to $29 billion last year, according to Google filings. Amazon's ad business makes more money than Microsoft, Snapchat, and Twitter combined on advertising. And then finally, Amazon's ad business generated more annual revenues than the company's physical stores and about the same amount as Amazon Prime and its other subscription services. So it's not just breaking it out and seeing this figure, it's when you stack it up against some of these other properties, other businesses, other line items, it really is a force to be reckoned with.
It's an absolute juggernaut. And I think the only reason it goes underappreciated is because there's probably some cognitive dissonance. Facebook is an advertising company first. Google is an advertising company first. Amazon is a commerce company first. So right. I don't know, but at this point, it's so clear that it's far and away the number 3 player in digital advertising. Yeah, it stacks up favorably. I mean, you could take a bunch of other ad first companies and stack them on top of each other and still not get to what Amazon is doing. So it really is time for the industry to start appreciating this much more than they have.
Yeah, this is a terrible analogy, but it's kind of like how when I knew that Dove made soap and I used the Dove soap a lot, but I didn't realize they did chocolate. And so when I found out they made chocolate, I was like, but wait, they're a soap company. Why are they making? It's like figuring out that Cadbury's does like shower gel. Like, what? Well, that's no, they shouldn't be doing it. I'm not a big fan of the Dove chocolate. So I'm biased.
Yeah. I remember an old marketing professor asking the question once about BMW and asking, do you think BMWs are safe cars? And a lot of people were like, no, not sure. And he was like, they're actually one of the safest. Absolutely one of the safest. But they market themselves as the ultimate driving machine. So that's what you know them for, right? It's hard for consumers to understand a company's positioning through more than one fundamental lens.
Yes, excellent point. Andrew, let's finish the lead story by talking about some of the Super Bowl ads, which you had noted they weren't just Amazon advertising at the Super Bowl. They had a particular intention with these ads. Yeah,
well, they had 2 ads, or at least 2 that I saw. Were there more?
I only saw 2.
Okay,
think, yeah.
One of them was just a straight up promo for their impending NFL Thursday Night Football exclusive, which starts in the fall. So I thought they did a good job just creating awareness around that. And then the other one was, I think, a pretty heavily talked about spot for Alexa using Scarlett Johansson and Colin Jost about Alexa reading their minds. It was actually a pretty funny spot with celebrities that I think are generally well liked. So it worked on that level. They also, in the beginning of it, used a quick promo to remind viewers about NFL Thursday Night Football coming in the fall. What I also liked about it strategically for Amazon is that they showed them using Alexa in every corner of the house. So I felt like they were really trying to kind of get this message in about Alexa's ubiquity. And then the other thing just about Alexa reading people's minds, you can almost see that there's this kind of Alexa fatigue that has set in where people are like, yeah, I have an Alexa, but I just use it to set timers and alarms and listen to music. I think they're trying to advance the conversation and remind people that maybe Alexa can do more and is smarter than they're giving it credit for. So I'll have to put Alexa to the test and see if it can handle some of my queries a little bit better than it has in the past. But I thought it was one of those ads that just worked really well across a lot of dimensions, from how it really hit on their marketing strategy and then also just kind of resonated with the viewer who just kind of wants to be entertained.
Yeah, I mean, you said it seemed like it was pretty popular. It was Amazon's Mind Reader ad. It was the most viewed Super Bowl 56 commercial on YouTube on game day, according to David Cohen of Adweek. So it definitely generated a lot of buzz on that platform on Super Bowl Sunday. The other one you mentioned was Football is Open, which was the promo for NFL Thursday Night Football on Prime Video. Andrew, really quickly, how big of a deal is this going to be? Because people might think, well, you know, they bought the rights. Grand scheme of things, it's a handful of games compared to how many games there are available. How big of a deal of this, and what should we expect from Amazon getting the rights to Thursday Night Football starting next season?
I don't tend to overstate the importance of things. I like to really take a calibrated view of most trends. I almost think that there will be like a before and after in the history of advertising for Amazon taking on Thursday Night Football. Because big brand advertisers who are used to advertising around these tentpole events have to now advertise through Amazon. They don't have a choice if they want to advertise on those sorts of games. It's going to be a totally different experience. I assume that Amazon will have a few other tricks up their sleeve, but just putting the Amazon advertising apparatus around what they're doing, meaning that if you are a consumer brand specifically, you're going to be able to target these TV-like ads to the right consumers and then measure the impact, whether people are more likely to purchase those brands after the fact. I just think it's going to be a really powerful experience. I also think it's going to be a way for Amazon to flex its muscle with some of these non-endemic advertisers. Think insurance brands, auto manufacturers, to be able to target people based on the life stage. And who knows what life stage consumers are in better than Amazon. They know if you're buying a bunch of new baby gear, to be able to deliver ads against those. So I think it's going to be really significant in setting the stage for what will be the future of TV advertising.
Amazon getting Thursday Night Football starting next NFL season. Stay tuned. Pun very much intended. It's time now for the halftime reports. Andrew, we've talked about a ton, but one takeaway, one, maybe two if you could, from the first half, and then a letter grade for Amazon's Q4 and I guess full year performance.
Yeah, well, I think advertising, not a surprise. We've seen this for a while. That's one big takeaway, but we're only getting started still. So there's a lot more in front of Amazon. As far as a letter grade, I think Amazon probably deserves maybe a C- for the quarter.
Oh, an honest C. How come?
Yeah. And that said, you know, if I'm Amazon, I'm pretty happy if I get a grade like that for a quarter and watch my stock balloon by $200 billion in market cap. Just think what can happen if they have an A quarter, and they do tend to have plenty of those.
Mm-hmm. Yeah. Was there one thing more so than the others that gives you that C-? Was it the online store sales falling a little bit, or another part of the business? Yeah,
it's the declining momentum on the commerce side of the business, and then how that affected the ad sales. Now, there's plenty of opportunity here. I'm just measuring this quarter.
Yeah.
You know, when they have more favorable comps and do a few things here as we get into 2022, I think those numbers are going to turn back up in a significant way. So I fully expect the grades in the next couple of quarters to be much better.
Yeah. We've got to pay close attention to Amazon's ad business. We're expecting Amazon's share of the US digital ad market to jump by nearly 2 points. And by the end of 2023, will increase its share to 15%, mainly at the expense of Google and Facebook. That's what we've got time for the lead story. It's time now for In Other News. But first, a quick word from our sponsor, Mountain. The rise in connected TV viewership has given advertisers a new way to drive incremental reach and revenue. But they need the right marketing software solution to truly make the most of this opportunity. That's where Performance TV comes in. Mountain's connected TV software platform allows advertisers across every industry to drive more visits, conversions, and revenue, all from a single intuitive solution that's optimized to deliver performance. Visit mountain.com to get started today. Right, folks, we are back today in other news. Shopify is rolling out easy-to-use 3D and AR tools, and what to make of all of these store openings and closings. Story 1, Shopify is rolling out easy-to-use 3D and augmented reality tools, notes Kevin J. Ryan of Inc. The e-commerce platform now allows its online merchants to launch 3D and AR versions of their products directly on their websites, he writes. Shopify is reportedly partnering with UK-based AR platform Poplar Studio to offer the service through an app that costs businesses about $50 a month. Shopify already offered some 3D and AR features, but this brings everything together in one app. So Andrew, shoppers being able to view products in 3D will move the needle, the shopping needle, by blank out of 10.
2 out of 10.
Just a 2. How come?
I don't think the use cases are pervasive enough for AR. I think we've talked about it with respect to cosmetics. Okay, I concede that one. I think that's a fair use case. I think for AR and apparel, we've got a long way to go for it to properly fit people in that experience. So maybe into the future, but I don't see that being near term at all. And the other example that I hear about a lot is placing furniture in a room. I will just say, as somebody who just bought a new couch, I did not use AR. I had no desire to use AR. I just looked at it online and I could basically picture it in my room. So the use case to me wasn't there. Listen, there's always edge cases, but I think we like to talk about technology through the lens of edge cases. I'm much more concerned with broad consumer adoption, because if you don't do these things regularly, it never really gets a lot of traction.
Yeah. According to retail publication Charged, they said that Shopify merchants that have added 3D images to their websites have experienced 94% higher conversion rates. But who knows how big that study was, that sample size. Also, it could be quite narrow, to your point, edge cases, or what categories they were covering in that research. Story 2. Despite the brick and mortar apocalypse headlines we've seen in recent years, 85% of everything we buy in America is done in a store. 85%. In 3 years' time, 80% of shopping will still be brick and mortar. Last year, data from Coresight Research showed that the number of store openings, just over 5,000, outpaced closures, just under 5,000, thanks in part to strong consumer spending and relatively few retail bankruptcies, notes Insider Intelligence senior analyst Zach Stamber. That trend from last year has bled into 2022, as store openings far outpaced store closures by the 4th week of January. Andrew, what the recent store openings and closings say about the brick and mortar landscape is blank.
On fire.
Oh.
It's on fire. Brick and mortar, I mean, I haven't seen momentum in this channel ever. We're actually just reporting our holiday numbers, and we show brick and mortar. You know, in a normal year, it might grow 1%, 2%. 3% in a really good year. We're showing double-digit growth rates. And what's even more impressive, this isn't like a double-digit growth rate off of the bottom of the pandemic recession. Q4 last year already was doing okay. We've just seen it shoot up. I think the heat in the consumer economy is off the charts right now because people have government stimulus money. The labor market is as strong as it's been in some time. Inflation is also pushing up some of those spending figures, so I don't want to discount that factor. But the bottom line is growth is absolutely there, and it's happening at brick and mortar. What's amazing is it's not necessarily due to a ton more foot traffic. People are just spending a lot more on every average trip to the store.
Yeah, that's what we've got time for. Andrew, thanks for hanging out.
Thanks, Marcus.
Thanks to Victoria. She edits the show. And thanks to everyone listening. We'll see you tomorrow for the Behind the Numbers weekly listen, hopefully. An eMarketer podcast made possible by Mountain.